Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar resumes its upward trend after finding a cushion for the second time around the level of 65.25. And from the bounce, it is expected to see the market recover back towards that key level and take the challenge on at 66.30, which is also seen as the 60-day simple moving average. While continuing to monitor key indicators and follow the recommended levels, it is assessed that we possibly may reach its upside goal, being 66 cents. However, in case of any weakness, we should still continue to monitor that level of 65.25, as below here would expose the region of 64.80, which should attract some bullish attention. Moving on to the euro, well, the market nudges slightly higher as the dollar index, which measures the greenback strength against a basket of 6 major currencies, was flat at New York close, and that was at 103.8090. Looking ahead to Wednesday, the focus now shifts on the US GDP data, and in Europe, the German retail sales and the monthly inflation figures. While on Thursday or Friday AM Sydney time, the US Federal Reserve's preferred inflation gauge, which is the core PCE, which should anticipate possibly much volatility depending on the number, with an expected decrease slightly to 2.8% from the previous of 2.9%. Based on the technicals though, we can see that the ADX is holding to a bullish trend, and while the technicals are married up with the RSI to the MACD, I feel the topside target still awaits at 108.7080, and a break there will give further exposure onto 109.35 to 40. Traders should monitor key levels and adapt strategies according to their risk management, as the markets could change considering the volatile data that's going to be released later this week. The dollar yen, well, the market slightly weaker overnight and now pulls back briefly to the lows of 150 before bouncing. The economic data on Tuesday showed the Japanese national core CPI decreasing from 2.4 to 2.1 year on year in January. The data temporarily supported the yen after falling towards the lows, mentioned around 150. The recent inflation figures have heightened expectations for an impending shift in monetary policy. Although anticipated that the zero interest rate policy could be discontinued in April this year, these rising expectations are expected to strengthen the yen by narrowing its yield spreads. Turning to the technicals, the market has buckled, as we can see here from the RSI and the MACD, so I do feel we should continue to monitor the key level of 149.75, as a break there could potentially see a downturn and reverse the market's bullishness back to a negative bias or bearish to 148.80 down to 148 and reassess from there. Looking at sterling, well, the market continues upward trek after recording 8 up days out of 9. Looking to the outlook with a light economic calendar, I still feel the upside target of 127.15.25 or 127.65 is in focus. And be aware of that level, because around that 127.65 did draw much volatility into a bearish case, and we saw 2 heavy down days back in early February. We can see now the market is slightly pausing as it gets close to the top side, but the technicals are holding to the bullish case from the ADX, so therefore supports the upside call, and any pullback likely to find support on the day of 126.25. The gold market took another challenge to that key level and still remains limited to renewed gains around 2038.42. But in light of the technicals, that is the ADX trending to a bullish case, could see a break and extend the move on towards 2051 to 56, and with any pullback still likely to find support around 2025. Wrapping up with oil, the market continues to build on its gains since Monday, and as we can see now is closer towards that key level of 78.5 to 60. A break here would invalidate the recent bearish engulfing Japanese candle and therefore strengthen the bullish signals on towards the region of $80, and with the inverse head and shoulders, the measure moves anywhere from 81 to 83. Any pullback expected to be shallow, with support now seen roughly around 77.5 to 76.65, which was recently challenged the previous day. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the day.